First of all, thank you very much for joining us today to 7IM's Unconventional Wisdom. Changes going on in the world today are spectacular. That creates, in the aggregate, we believe, the opportunity of 100 years for the financial planning profession, for the professionals in this room. We have a couple of views, we have a couple of things to help you deliver that advice to your clients. They can't depend on a government or a company anymore to write them that little check every month. They need you. And we're here to try to help you, providing that support for your clients. You'll notice in the registration desk out front that there are newspapers, but they're from 1979, 1989, and 1999.
So we went back and had a look, 36, 26, and a few other years back, just to see what was not just conventional, but accepted wisdom, which people then followed. Because the point of today is therefore to look at what we're saying now and say, actually, how much of what we're doing now is actually going to look pretty stupid in a few years' time? And what are tomorrow's embarrassments? What are the things that people are going to turn around and say, you told me to do what? That actually in 10 years' time, in 20 years' time, 30 years' time, and is that important? Of course it's important. Because Tom was saying with regard to pensions, it's not just a matter of all living longer. If they're inheritable, it's going on to the next generation. Our responsibility for looking after people's money means that we have to question these things and question the conventional wisdom and look at the unconventional.
What are the key points you've taken away from it so far?
I think the first session and the unconventional wisdoms, I think thinking outside the box.
Not accepting the status quo and maybe thinking somewhat differently about what the future might hold that's been very thought-provoking.
If I can recap some of what I heard during the course of the day, starting with Chris Derbyshire talking about things like the savings risk.
We find, for example, that savers think of saving as something you do for a rainy day, not something you do in a structured way for something which you know is going to happen, such as retirement. So the research asked the question, I understand that I may need to take some investment risk in order to achieve my savings goals. About half of the respondents disagree. And when the savers are told that, well, you're going to have to save a bit more then to reach your retirement goals, they're not impressed and they just decide, no, I will not do that.
The need to take risk.
So now I want to highlight something I'm calling the risk delusion. I think it's particularly relevant to planners and advisors. Risk generates returns. Investment risk is the investor's friend, not the enemy. And I think the regulatory environment demonizes risk. The industry then responds by producing bad products to address risk aversion.
And comments on deflation from Chris.
I've tried to pick up on what I think is a delusion about the significance of deflation. And the question is, are we in a new economic cycle? That's really what people are worried about. They're worried that this concept of deflation is becoming synonymous with slower growth. We are all very familiar with deflation. Think about the prices of computers. Think about the prices of flat-screen TVs. Think about how much computing power you now get in your computer, which costs so much less than it did. You get a sense then of the incredible impact of new technology on prices.
We have a new friend of 7IM. His name is Steve Groves.
I'm going to talk a little bit today about my perspective on the retirement landscape going forward. I think we'll have a look at what the changes mean. I want to touch on what I think they mean for customers, most important thing. And then I want to take a look at what they might mean for advisors and how providers will react.
Tony had his 3 C's, and Sam gave us a whirlwind trip through pension.
So seeing what you guys are doing with 7Imagine is brilliant, that looks fantastic.
Every time I come to any event with 7IM, it just reinforces really the partnership, and not just with me, the financial planner, but also the end users, I think, with clients.
I think the likes of 7IM today are just reinforcing the fact that they've got rigorous processes behind the scenes to make what they offer to us something that's robust and repeatable and that we can use with confidence with our clients.
Thank you all again for making the effort to join us today. I hope you came away with an idea of the trouble that we go to try to measure the risks that investments can present so that we can try to stand here with a straight face and say we are going to be pretty good at delivering returns within the upper and lower boundaries of probability It's not an easy world out there for people who have to figure out their own retirement. My goodness, there's a real need for what the people in this room do. And if we do it well, and if we create that profession, I think we're all going to be better off for it. And we can all feel better that we've actually done something more than make a living, that we've done some good in the world.